One of the more confusing things about buying a home is property taxes. Tara Ryan here, and today's tip from Tara is going to be an introduction to a series on property taxes, how they work here in Georgia, and how they impact your real estate closings. So let's get into it. In Georgia, property taxes are based on two things. It's based on who owned the property on January 1 of the year, what exemptions, etc. they might have qualified for, and what the property was worth on January 1. So that one rule basically covers everything. It's based on January 1. The bill itself, timing-wise, comes out in the fall of that year. In most counties in Georgia, that's October-November timeframe. The bill, however, covers that calendar year, January 1 to December 31st. So this impacts our closing because we might be closing anytime during that year. So let's talk about how it works. So it impacts us a couple of ways. One, the escrow account that we, the lender, are going to set up for the buyer that basically determines how much we'll be collecting each month towards their property taxes. And a tax proration, which the closing attorney usually figures out, which is basically a proration between the buyer and the seller, because again, the bill's going to come out in the fall, but the property might have changed hands perhaps mid-year, for example. Those two pieces, the escrow versus the proration, are really two separate things, and that can certainly confuse some folks through the process. So for escrows, let's talk about that piece, because there's a unique little situation with how that gets calculated that would be helpful for you to know. So most buyers do choose to have an escrow account, and that means that the lender collects money throughout the year towards the property taxes. So as part of the mortgage payment, the buyer is going to pay 1/12 of their property tax bill. The lender will hold those funds in escrow and then use those funds to pay the tax bill when they're due. So how much we collect into escrow depends on what month you close and what month the tax bill is due. There's actually a federal formula that every lender follows. So this is the same regardless of lender. And we don't get to make this up, okay? It's a formula that's intended to have no more than a 2-month cushion at the lowest point in the account. So let's walk through a couple of examples. Let's say that we're closing in May, and the property tax bill is due in October in this example. Okay, so if you close in May, the first payment is due in July, and so you will have made escrow deposits before the bill is due in July, August, September, and October 1st. So basically 4 months before the tax bill is due. But we need 12 months worth of payments to actually pay the tax bill, right? So we need to collect 8 more months into escrow, plus the 2-month buffer I told you about. So we would need to be collecting 10 months into the escrow account. But remember, you also get a proration from the seller for the time that they own the home. We're closing in May, so you're going to get a 5-month credit from the seller for the time that they own the home. You get that credit at closing. That makes the buyer and seller even, and then the buyer is on the hook for the entire tax bill when it comes out in the fall. So remember I said we're going to put 10 months into escrow, but then we're going to get 5 months of credit from the seller. So the net to our buyer is 5 months due from them at closing. So what I'm going to get at is basically no matter when the tax bill is due or what month you're closing, it almost always works out to about 5 months due from the buyer at closing. Let me give you another example. Let's say we're closing in November. The tax bill has already come out, right? The tax bill has been released. And the seller, therefore, has probably already paid that tax bill. Our buyer's first mortgage payment in this example, if we close in November, would not be till January. So now we're collecting towards the next year's tax bill. So by October of next year, you can see that the buyer will have made 10 escrow payments January through October into their account. So to hit that magic 12-month that we need, plus the 2-month buffer requirement, we only need to collect 4 months at closing because they will have paid 10. We need 2 more to hit the 12 and 2 more for the buffer. Okay, so we're going to put 4 months into escrow, but we still need to prorate with the seller. The seller's already paid the tax bill for this year, right? We're closing in November, and so we need to pay the seller back for the portion of time that the seller has already paid for, but they won't live in that home, and that's 1 month. So now our buyers paid 4 months into escrow plus a month credit to the sellers. Again, that magic 5 months. So it's kind of complicated, but that 5-month rule applies in Georgia in almost every case. So here's a tip for you and your buyers, and something that most lenders don't explain clearly. It almost always equals that 5 months net, but not all lenders show it that way. Some lenders only show what's going into escrow, and they don't account for the proration from the seller. So depending on the time of the year, if your buyers are comparing lenders, they're seeing vastly different numbers for the escrow situation, right? It could be a time of year where they're overstating the amount that's needed or understating the amount that's needed, and they get very confused. The escrows are going to be the same regardless of lender. That's the key point, okay? And it's almost always going to be about that 5 months on property taxes, and you can look like the hero by being the one to explain that to them. So in future episodes, we'll get into more details of other aspects of property taxes, including situations where buyers might want to dispute their taxes, the importance of the homestead exemption, how the prorations are calculated, specifically between the buyers and sellers. And for now, if you have any questions about property taxes, we are here to help. We want to be your lender.